Hi everyone, I hope you've had a great summer so far. Welcome back to another episode of the Edge Capital video podcast series. I'm here with Vadim Khramov, CIO and founder of Edge Capital, $600 million investment manager focused on sophisticated CeFi and DeFi trading strategies since 2020. Edge Capital is one of the first investment managers to also offer a token-denominated share class in Bitcoin, Ethereum, Solana, and several other tokens. Today's video, a couple key themes we're looking at. Number one, crypto outlook for the rest of 2025, the rapid rise of credit markets in both DeFi and centralized finance, and lastly, the role of digital asset treasury companies, why they matter, and some of the risks they may introduce. As always, this is a research call. Please note that this content is not financial advice and does not constitute to buy or sell securities. Please refer to the disclaimer at the end of the video. Vadim, I'll hand it over to you. What are your views on the crypto landscape and how does the rest of 2025 look in your opinion?
Thank you so much, Boback. In our opinion, macro environment and overall landscape in crypto are overall highly supportive. In the United States, the passage of the Genius Act provided a clear and constructive regulatory framework. We've also seen the SEC drop in multiple enforcement action cases against crypto companies. So this has been all a very new theme for us over the past year, and it has been driving Bitcoin prices and also the venture money going into the crypto. We see currently three core themes happening. The first one is credit markets are growing in the digital space. Bitcoin is super liquid, trades 24/7, more than $2 trillion in valuation. It's actively used as collateral as well as many other assets. Second one, we see an increasing number of digital asset treasury companies listed on US exchanges through inverse mergers usually. That has been a new phenomenon, but it's been very active and it's been accumulating a lot of assets. And number three, we've seen a few major players in the industry are launching their proprietary chains or their own applications. Examples are Tether just introduced a new chain called Plasma, which currently trades at about $30 billion valuation on the pre-market. We also see products like World Liberty Financial trading about $10 billion, which is reportedly backed by Donald Trump. It's been drawing significant attention from investors. There are multiple other big projects and companies trying to launch their own chains and expand in this direction.
Brilliant, thanks so much. So just touching a bit more on the credit markets. Obviously, you mentioned that you've seen strong growth in the crypto credit markets, both in centralized and decentralized finance. What is driving this boom and what does it mean for the broader ecosystem?
That's a very good question. Yeah, there's definitely a boom. What we currently see, we see almost $100 billion in assets only in DeFi space, which are actively used for lending. So the core protocols like Aave, for example, are scaling rapidly. Aave just reached $67 billion in assets. It allows you to borrow and lend pretty much any type of liquid collateral. We also see that a rise in Bitcoin-backed lending has really amplified the market activity. We also noticed that large protocols like staked ETH from Azerfi and Athena stablecoin called USDE have been also actively used as collateral for various transactions. There are a few other platforms, including Morpho, Maple Finance, August, and Arcus, have been aggressively expanding towards this dimension. For example, Morpho is now the second largest protocol that gained a lot of traction. It has about $10 billion in deposits, and it's offering customizable credit pools with a variety of different structures in terms of borrowing and lending. In our opinion, these developments demonstrate how decentralized credit infrastructure is not only scaling in size, but it's also diversifying in this nature, right? So we generally think that this is the future of credit globally, which is a tokenized version of any type of assets and lending 24/7 for any asset.
Brilliant. Really appreciate the insights. So just touching on digital asset treasury companies, obviously a massive and a very popular narrative, that's taken across the crypto space in 2025 so far. For the benefit of the viewers, it'd be fantastic to get just a brief overview of what they are and why they're so important, and potentially touch on the risks associated with all these DAT companies that are launching.
That's a very good question. So digital asset treasury companies are public firms that are holding digital assets on their balance sheet. So the first one was MicroStrategy, that's holding a substantial amount of Bitcoin, almost 4% of all Bitcoin, and this is the largest treasury management companies. We've seen a number of new companies that came up on the market, and they've been accumulating a lot of resources into them. In our opinion, it effectively provides access to retail markets and to institutional investors through TradFi rails to digital assets in slightly different shapes and form than just buying Bitcoin ETF. For example, we think that the recent rally in Ethereum prices to almost 5,000 in mid-2025 was primarily attributed to the wave of this treasury purchases of Ethereum from the market. So all these new companies started buying Ethereum, prices went up, and these assets have been locked in. Speaking about the risks, so generally we think the core risk over here is that in a bear market, the price of the shares of these companies can substantially underperform the net asset value of collateral they have on their balance sheet. So it didn't really happen with MicroStrategy historically, but because there is a variety of companies right now with much smaller liquidity, that definitely remains a risk. With that said, most of these treasury companies are long-term holders of these assets, and they're relatively publicly announcing that that they will not be selling these assets until they're forced to do this, right? So in this case, we don't really see it as a systemic risk in this case. They will just hold the assets for a prolonged period of time without amplifying the sellers.
Fantastic. Thanks, Vadim. So looking sort of in the short term, the next 6-12 months, which developments in the crypto markets are you most excited about? And what do you think the leading narrative will be heading into year end?
This is an excellent question. We see a number of great companies launching right now. So we definitely want to say that there is innovation taking place and extra market expansion. So there are a few layers over here. The first one, these are projects related to AI, artificial intelligence. So for example, there is one chain called ZeroG is launching relatively soon that's specifically AI based. It has very good traction on the pre-market so far. And that is being fundraised this amount of capital at a relatively high valuation. The second layer is large companies are launching their own blockchain projects, including Tether is launching Plasma, for example, right? And the last one is RWA, or real world assets. This just continues its expansion. So I think going forward, assets will be tokenized, they will be used for collateral, they will be used for leverage, they'll be used for borrowing and so on. So we see this trends have been accelerating over the past 6 months very actively.
Great. Thanks, Vadim. Thanks for all your insights. Thanks everyone again for tuning in. If there's any questions on our research or what we're doing at Edge Capital, feel free to reach out, and looking forward to doing another video very soon. Thank you.
Thank you so much.